As investors try to digest the rising energy prices, hotter inflation figures, and a technology-led market sell-off, attention is now shifting toward what could become the largest IPO in history. With a valuation approaching 1.8 trillion US dollars and strong investor demand, SpaceX will be priced today and will go public tomorrow and has obviously the potential to reshape market flows. But how? We will discuss in this episode. So welcome to Swissquote's Daily Market Talk. It's 11th of June. I'm İpek Özkardeşkaya and we will discuss the world and space economics. But before we do, and as always, please keep in mind that opinions are my own and this is not financial advice.
This show is brought to you by Swissquote.
But let's start with the boring stuff. US inflation data came in as strongly as expected yesterday. Headline inflation hit the 4.2% level in May, while core inflation advanced to 2.9% year over year due to the Middle East war-led rise in energy prices. Now, this was good news, obviously, but the numbers were broadly priced in and could have given actually some relief to investors hadn't the Middle East tensions escalated to send oil prices 3% higher in yesterday's trading session and inflation expectations up along with them. So the S&P 500 fell 1.62%, while Nasdaq 100 tanked 2%, with technology leading losses at a moment the bubble fears are rising and just before the biggest IPO of all times. This morning, US crude rose past the $93 per barrel level before easing on, I don't know what optimism, but European indices are clearly under pressure before the European market open as the European Central Bank is preparing to announce its first interest rate hike in almost 3 years later today in hope to fight the rising inflation with clearly the wrong but the only available rate weapon, while the US indices are better bid as the world's attention is now shifting toward what will become the world's biggest IPO of all times. SpaceX is set to be priced today and is expected to make its stock debut tomorrow, June 12th, at a valuation approaching the 1.8 trillion US dollars, making it one of the world's most valuable companies from day one. Demand is reportedly strong, very strong. The IPO is reportedly oversubscribed more than 4 times, and some major index providers are preparing to include the stock shortly after its listing. But note that S&P refused to include SpaceX into its indices before a year at least, which is extremely comforting to me in a way that S&P actually cares more about long-term quality of their indices than short-term height, but others like Nasdaq and Russell, for example, will be jumping straight in. As a result, and given the size of the IPO and the hype and the latest news, demand will likely be strong. But the real question for investors is whether the stock can live up to the hype in the longer run. So there are obviously 2 major scenarios. The first one being the bull forever scenario. In this scenario, investors take a chance in this futuristic company that gathers a palette of businesses, futuristic businesses, including already existing ones like satellite internet, for example, which is Starlink, a social media platform, X.com, formerly known as Twitter, an AI model called Grok, and AI infrastructure following the integration of xAI, which was home to X.com, Grok, and the AI infrastructure itself. So those are the existing businesses. But more excitingly, SpaceX has got this not yet existing business, space AI infrastructure, and that is actually gathering all the hype in the world. So in this bullish scenario where investors will be dreaming of the sky and the space and orbital infrastructure, the SpaceX stock could eventually surge after its listing and pull the entire space ecosystem higher with it. But note that because markets are so efficient and investors are so smart, well, they have already took a chance to listed space and defense names into the SpaceX IPO. So stocks such as Rocket Lab, Redwire, AST Space Mobile, Intuitive Machines, and Voyager Technologies. All of these companies have enjoyed strong speculative flows as investors search for the next SpaceX proxy. We have seen a certain pullback since the beginning of the month where we saw peak levels in many of these stock prices, but many are still meaningfully up compared to the same time last year, for example. So their valuations today make the second scenario a little bit more likely to me, which is buy the rumor, sell the new scenario. Because the existing space shares already benefited from the pre-SpaceX hype, as I said, well, they could eventually suffer from capital rotating to the new superstar of the space, even though all goes well, and maybe especially if things go well for SpaceX. And well, the sell-off could obviously extend beyond the space industry into other technology pockets of the market that have gone, well, parabolic in the latest months of trading. Why? Because at valuation approaching the 1.8 trillion US dollars and a fundraising target of roughly 75 billion US dollars, the SpaceX IPO will likely create a big liquidity vacuum. To absorb the huge amount of liquidity, investors, both institutional and retail, may have to sell their existing holdings to free some cash for their SpaceX allocations. This is also the reason that could partly explain the recent sell-off that we saw across chipmakers, for example, even though a part of the sell-off was also attributed to the economic data supporting a hawkish Federal Reserve policy and a parabolic rally that was calling for correction as well. So if that happens, if investors rotate their cash from existing technology names to SpaceX, many of the names that have rallied hardest ahead of this IPO could experience significant profit taking in a way to trigger short-lived frenzy around SpaceX, whether we are talking about the space shares themselves or other technology holdings, and I'm especially looking at you chip makers. Then, once the initial shock behind, when the dust settles, say in a few months from now, if SpaceX does well and survives the initial hype, and if the company convinces investors around the world that space business will generate revenue in a reasonable timeline, other space companies could also benefit from the new business outlook in space, and space companies could eventually be the next big thing led by SpaceX. Who knows? That's the bullish case scenario, but unfortunately, well, things could not go according to Elon Musk's plans. Suddenly, investors realize that they're putting their money into something, well, it's going to be very difficult to realize, or that would take years and even a lifetime before anything in space could generate revenue. So unsurprisingly, opinions in the market diverge on something this science fiction worthy. Retail investors chasing the next great wave low the speculative potential behind the SpaceX IPO. Institutions are also reportedly oversubscribed, but some are still skeptical. A Danish pension fund, for example, said that it won't take a chance in SpaceX as it is grossly valued, they said, and has a catastrophic governance structure. They're talking about Elon Musk's 85% voting rights in this company. Then Morningstar valued the company to less than half of what Elon Musk thinks it is. Now, looking at the numbers, as much as we can find these numbers, at the current valuation, SpaceX looks worth almost 100 times its sales of last year. And this is a valuation based on what SpaceX could become in 10 years, which is, I think, a bit stretched and not necessarily taking into account the speed at which the company burns cash to finance the monstrous cost of building data centers in space. So my base case scenario is that SpaceX enjoys a strong debut. The combination of Elon Musk, AI, Starlink, space exploration, and index inclusion is simply too powerful to be ignored. Because remember, some major index providers such as Nasdaq and Russell will include SpaceX in their indices very shortly, and Entropic predicts that about 30% of SpaceX free float is set to be owned by passive investors through these indices. So Ladder will ramp up demand whether you want to be invested in SpaceX or not and support the bullish price action unless people start selling their Nasdaq and Russell indices due to SpaceX inclusion. But the valuation is still very much eye-watering for a business that is yet to exist and turn profitable in an extraterrestrial setup. And the amount of shares that will inundate the market from this week to the end of this year with the upcoming Anthropic and OpenAI IPOs are sure to increase the technology share supply after years of share buybacks conducted from the big technology companies that reduced supply and somehow supported prices. And in the light of the latest developments inside SpaceX could eventually be valued less as a space company and more as a next generation AI infrastructure giant, one among many and probably many more to come in a market where supply is rising. In that case, its name will continue reflecting the dream of a faraway future, but SpaceX valuation may be much less stellar than its name suggests, and for the rest of the technology industry, we could also start seeing the higher supply weighing on the market prices and the valuations. So let's see, it's going to be very exciting, but this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.